Good afternoon, everyone. This is Anthony Alaka with Torrey Hills Capital, and welcome to the Endeavour Silver webcast for October 21st, 2021. I hope everyone is doing well, and I want to thank you for taking the time today to join our virtual lunch. Almost all of you are familiar with Endeavour Silver. The company presented about 5 months ago, but there have been some key developments since then, and we're happy to have them on again to give us an update on some recent milestones. We feel that Endeavour Silver is particularly well positioned to benefit from the positive outlook for the industrial demand for silver. A move to renewable energy suggests that silver prices will not only improve, but remain strong for the foreseeable future. Just to refresh your memory, Endeavour Silver is a mid-tier precious metals company with high-grade underground silver gold mines in Mexico. The company is also advancing its Terronera project, which will become the company's flagship mine. Endeavour Silver also has a portfolio of several other exploration and development projects in Mexico, Chile, and now we're happy to say the US. Endeavour Silver trades on the New York Stock Exchange under the ticker EXK and on the TSX main board under the ticker EDR. It's currently trading about $4.85 per share US, representing a market cap of only $820 million. The company has a strong balance sheet with roughly $150 million in working capital and an accomplished management team that we've known for a while that has a proven track record of delivering results. And with the recent pullback in the price of silver, we feel that this is an excellent opportunity for those who believe in the long-term prospects for silver. With us today to discuss Endeavour Silver's operations and growth strategy going forward is the company's CEO, Dan Dickson from Acapulco, Mexico. Welcome. It's great to have you on today.
Awesome to be here. Appreciate it. So always like the intro that you do, Anthony, and I think we can give a pretty good update. And it's glad to hear that a lot of people have heard the story, so I don't necessarily have to go into total depth and get some time in at the end to answer some questions. I think that always adds a lot more value sometimes on these lunches than necessarily just hearing my voice for an hour straight.
Absolutely. And to Dan's point, if anybody has a question during the presentation, I think the easiest way is to simply type it into the Q&A or chat box, and we will make sure it gets answered. So with that said, I'm going to turn it over to Dan. Dan, the floor is yours.
Awesome. Thank you. And Anthony's right. I am in Acapulco. On the weekend, had a chance to get our board, most of our board, one gentleman who lives and resides in Australia, Sydney, had difficulties getting out, or really, he can get out of the country. It's about getting back into Australia. So he wasn't able to join, unfortunately, but the first time I got to see my board in person in a year and a half, and first time since I've been made the chief executive officer. So it was a very good board meeting last weekend. I got some valuable time with everyone together, which is always a lot more a lot easier to get communicating, kind of get strategy put on the table and be able to throw back ideas back and forth, and for them to walk Terronera and see where we're putting the plant, see where our portals are going, and just get that general feel. And ultimately questions come out of that, and talking about the roads and transportation and how we're going to get equipment to site, and just those things where these guys got a lot of experience and helps our management team and ultimately kind of quenches their thirst of risk and where we see bottlenecks, and allows them to see how we're mitigating some of those risks. And it's always beneficial. So from Puerto Vallarta and being down there, I got a chance to come down to the Acapulco Mexican Mining Convention. It's one of the larger conventions in North America behind PDAC and the expo they do in Las Vegas for equipment every 4 years. But it's been handy to be able to see some of the key governors here in Mexico where we're operating, and some of the key conglomerates, the bigger companies, the Fresnios and Friscos, and be able to kind of communicate and build our relationships there. So it's hot. I was telling Anthony before we started, it was upwards of 105 Fahrenheit yesterday. And as a little Canadian down here, it's got a little warm for me, taking calls outside where I could be quiet, but or finding quiet space in the heat. But happy to be here. I'm always happy to go home. I'm traveling back to Vancouver tomorrow, but so who we are and what we do, not lots changed with me taking over as CEO. Bradford Cook was CEO for 14 years while I was with the company. I was the chief financial officer. A lot of the questions we've been getting is how does the vision of the company's changed? And I was part of the executive team in the C-level for 13 years. So I was part of that I think the difference really comes down to just how Brad and I kind of operate. We're different. He's an exploration geologist by trade. He's an entrepreneur at heart. Still involved a little bit, comes in 1 to 2 days a week. Good, a very good mentor for me, but I'm an accountant by trade, which so probably a little bit less of a risk taker, maybe a little bit more ambitious. I'm in my early 40s, and ultimately profitability means something for an accountant, and trying to attain to that long-term sustainable profitability through safe production is important to me. And we built the company off some good assets. Guanacevi, we've been there 15 years already. We expect to be there 25 years. In Bolañitos, we've been there 14 years, and probably get into the 20s as well when it's all said and done. All done through organic growth through the drill bit. We've bought assets, mined it, we sold some of those assets. But again, we've been built off the drill bit, and we continue to do that. And Terronera for us is going to completely take us to the next level, give us a platform that we haven't had in the past, to be able to continue to grow this company and maintain that silver leverage. There's a lot of silver companies that have picked up gold assets over the years, and we're not opposed to that. We're 60% silver, 40% gold. We have no lead and zinc, no base metals, so precious metals play. And we do have a nice multiple in our stock, and that's for all silver companies. It's scarcity of silver. How do you play in the silver market? And there's only a handful of names kind of in the marketplace that allows it to do it. The good news for us is Terronera keeps us in that silver stream. It's a 60% silver production and 40% gold. And we're looking for assets. Behind that, we have another silver asset that we're trying to take into the economic stage, so doing studies on it. And I'll get into that and why we think that can be our mine after Terronera. So here we are in Mexico. We do have a small asset we picked up in Nevada. In September, we closed that. It's called the Bruner Project. I'll get into that a little bit more. And then we have 3 exploration assets that we're talking about in Chile. We actually have a couple other assets that we're going to bring to market and explain that more to people in the future. But generally, the key aspects is we're here in Mexico. We've been here for a long time now. We have a head office down in Mexico for Mexican staff compared to our Vancouver office. And then Terronera is on the west coast in the state of Jalisco, about an hour and a half, 2 hours inland from Puerto Vallarta. Sustainability is something we always talk about now. It's something we've done for a long time. And part of the thing was where Brad and I are a little bit different. The first 6 months of my time in the company, I've been focusing on human resources, and ultimately a Tequido program that we call. It means I care for you. And ultimately getting our production to be safe production, making sure that we put a behavioral change into the company, and ultimately Mexico. The culture sometimes in Mexico is people won't speak up. We want them to be able to speak up from a safety standpoint, from a human resource standpoint, from a discovery standpoint. People have ideas all over to either save money or ideas to new areas to go in the mines and from an exploration standpoint. And the more we can get people to speak up helps us. And we've always been good in our communities. Guanacevi is beside a small town. Bolañitos is beside a small town. Terronera is going to be beside a small town. Having that social license with your community is vital to mining. It always has been. I think now you're just seeing from the institutions a big push in corporate governance and ESG. And I think we've always been in a good spot. We've had 8 years of publishing a sustainability report, so it's kind of in our fabric. It's just always continued that evolves, and we're doing a good job from that standpoint, and that'll continue. Our recent highlights, here we are in October, put out our 3rd quarter results. Phenomenal results through the first 3 quarters of the year. Our guidance was 6.1 to 7.1 million silver equivalent ounces in 2021. Through 3 quarters, we'd already hit the low end of that guidance. So we revised guidance early October and revised it up to 7.7 million silver equivalent ounces to 8 million. So we've had phenomenal production results out of Guanacevi. We've had better grades than we'd planned, obviously more throughput than what we'd planned. So it's been positive in that sense. Our economic study for Terronera came out in September 9th, the feasibility study. We had previously had a PFS on it, a pre-feasibility study. So we completed that feasibility study with a $175 million NAV using $20 silver and $15.75 gold. Returned a 20% IRR with a 3.5-year payback period. Using today's prices, that NAV reaches up to close to $300 million of NAV. IRR reaches 30%, and the payback period drops to 2.5 years. It's got a big upfront capital, 175 million. That was a big increase from the PFS, but ultimately we have a bigger project than what we had under the PFS. 33% more payable silver, 20% more payable gold. So the market viewed that as a relatively positive, almost neutral. But where Terronera stands apart is its cost to operate. Over the life of the 12 years, it's $3.24 all-in sustaining cost. So that includes all our capital, all our operating costs. It's $3 per ounce of silver. From an operating cost standpoint, it's about 59 cents per silver ounce while we're in commercial production. So that project will run through anywhere, any silver market, any gold market. It gives us a platform that we've never had with a 12-year mine life, might I add. We've started early works at Terronera. We approved a $13 million budget here in September that runs us through December, and we're looking for project financing, which will be done through debt. We've been working on that for the last 6 months and expect that to be completed hopefully in December, ultimately in January, and have that formal construction decision to start building Terronera for January of 2022. I did touch on the Bruner Gold project. We bought 300,000 ounces of historical gold ounces, 13 million ounces of historical silver ounces under 43-101. There was a PEA that was done by the old group, which would be considered a historical PEA. This was an opportunistic asset acquisition by us. Ultimately, the company that held it before, they were under distress. They had debt on their books, which is very difficult to do for an exploration company. They managed to do it. They'd put crypto tokens onto the gold or tied to the gold underground. We helped clean that up, paid them the money. They were able to pay off their debt. But ultimately, we bought this because of the value, and their economic study, which is historical and more work needs to be done, valued it about $80-90 million from a NAV standpoint. So our plan is to put an exploration, kind of grow that resource, and then put an economic study on behind it, maybe in 2023. So a little ways yet to go there. At the end of Q2, we had $125 million cash, just shy of $150 million of working capital, no long-term debt on our books at this time. Again, working to do that. And one of the items from the first half of the year is our cash costs and our all-in sustaining costs had spiked. Part of the reason was at Guanacevi, we did some operational development. It's development that went right into our operational costs. We're going to see that kind of come to fruition in our cost structure here in the third and fourth quarter. Ultimately, higher royalty costs with the higher prices, higher EBITDA tax in Mexico because of the more profitability. So did see an increase, like I say, in our cash costs and all-in sustaining costs, but we think that's going to be coming down here in the third and fourth quarters. Slide just shows our production guidance for the year with our other guidance. Sustaining capital through the first half of the year, we're at 15 million of the 30 million, so we're right on plan. Exploration budget was 10 million. We spent 5 million through the first 6 months. We'll have Q3's information come out November 9th, and a development budget of 22 million. We always say that development budget signaled the idea that Terronera would advance to a formal construction decision. For us, it's a big dollar amount, and ultimately good indicator to the market that Terronera is going to get built. We are in the situation where all necessary permits have been attained. We've got some amendments and extensions to go through over the next year, but those are generally in place to get started from a construction standpoint. Now it's just making sure the board feels comfortable with all the cash that we have, and if we put on debt on the books. Once that's there, we'll expect that formal construction decision. Cash costs, we'd plan to be $750 to $8 and $19 to $20 from an all-in sustaining costs. Again, expect the second half of the year to be more in line with that cost profile compared to what we had at the beginning part of the year. So our financial strength, the growth in earnings and cash flow over the last year, our cash position since Q3 of 2020. Like I say, balance sheet's greatly improved. At the end in Q2, we sold our El Cubo asset. It had operated with us since 2011, 2012 era. Closed that down and sold it to a company now called Guanajuato Silver. And we also actually closed another mine this year called El Compas that we put into production. It was just small. I can touch on it in a bit, but ultimately probably look to do something similar to what we did at Cubo. So Guanacevi, it's 80% silver, 20% gold. It's basically a significant portion of our production, almost 60% of our production this year, from 3 main areas there. El Curso is an area that we discovered about 2 years ago, and it's revitalized Guanacevi for us. You can see on this longitudinal section where it's situated right between 2 operating mines that we owned, Terronera Quattro, which we shut down in about 2014, with some of the highest grade material that we actually ever mined at Guanacevi. And then Malache, we opened up in 2019. Beginning of 2019, we opened that up. You can see we had a right of way all the way across this El Curso concession, which was owned by Frisco, which is a Carlos Slim company. We didn't buy the concession from Carlos Slim, we actually leased it, and we were leasing it for a royalty cost. When silver is over $25, we pay a 16% royalty. Ultimately, what we found here was something worth about 250 million. That was using 22, maybe it's worth 300 million, but we get about 66% of the value. He gets about 33% of the value. Continue to work with Frisco on some of the wedges that you see there, the triangles separating that. That's another concession that he holds, working to try to it's clear that the on the concession boundaries, the mineralization would go across that. Again, can kind of add maybe half a year to a year if we can get that, and we expect to get that. We have a very good relationship. It's worked really well for us, really well for them. They're getting cash flow from an area where they've never had a mine. It's been a positive relationship, and part of that goes to they have a lot more concessions in the area. So now that we've been at, like I say, at Guanacevi 15 years, we've now got another 4 to 5 years of reserves and resources, and ultimately expect 7-8 years out of here, and then that will get us to a 25-year mine life. So when we first arrived at Guanacevi, it was running 200 tons per day, running out of ore. It was underexplored. Brought in some exploration expertise, which Brad and Godfrey, and very successful in how we built the company. And it's amazing to think that we'll be here for 25 years when it's all said and done. Is what in Q3 we did 1.5 million ounces of silver equivalent, or basically just shy of 1.5 million silver equivalent. So a phenomenal production quarter in Q3, but generally been running about 1.2 million silver equivalent ounces. We have seen costs increase here, partly because of the royalties paid to Frisco. We did have some bonuses from 2020 that flowed into 2021. Special mining costs, special mining duty for more profitability, the higher royalty costs, and then OPEX development, which was at Guanacevi. Again, we expect those costs to come through and flow through, that Q3 and Q4 will be lower on an operating basis. Steady as she goes at Bolañitos. It's our other asset. We've been here 14 years, never had more than a 2-year mine life. That's underground vein mining, cost benefit. It's continued to operate as expected. You guys would have seen Brad earlier this year, or 5 months, 6 months ago. We're still doing 600,000 ounces of silver equivalent. It's a gold mine. 80% of our revenue comes from gold, 40% comes from silver, and it's going to be steady state. We have about 2.5 years of reserves here. Expect to have that at the end of the year. Ultimately, there's exploration potential. There's landholders all around us. Fresnillo owns concessions in the neighborhood. Still some mom and pops in the neighborhood. So we'll pick that up, and ultimately we expect to be here at least another 4 or 5 years. Maybe not the same life as what we have at Guanacevi, but again, if we can be at Bolañitos for 20 years, I think that's a phenomenal story, and what we've been. Between those 2 mines, we'll produce about 6.5, 7 million ounces, probably closer to 7 million next year. We're going through all our budgeting this year, or for 2022 now, expect to be that done at the end of December. And then we generally put out guidance for the annual guidance in January for the year. So it's exciting because ultimately Terronera will do what those 2 operations do, and then effectively cut our cost profile in half. Those are our mature assets, higher costs in the industry, so tighter margins. But like I say, Terronera will double our production and cut our cost profile in half. Just a quick note on El Compas. We'd opened this up in 2019, 250 tons per day. Ultimately, we had the same idea that we'd have at Guanacevi and Bolañitos. Underground vein mining, cost benefit to drill out a big reserve is difficult and ultimately very costly. So we generally don't do that. You follow the vein. We didn't have the same exploration success here. It's only a 250 ton per day. 2020, it did about 10% of our production. It was planned to be 5% this year. But ultimately, free cash flow was negative even at these prices. The resource was shrinking. There is exploration in the areas. We do have royalties on a number of properties. Generally, there's more copper on those properties run by a neighboring company called Capstone. So we're going to get all our value out of this. It's just what do we do with the plant that we have? The idea again was to get to 500 tons per day and continue to grow this asset. So currently we have a 500 ton per day plant. We'll see if we can get it somewhere in somebody else's hands. There are Canadian companies with exploration properties around. There are properties we can continue to explore. We just don't see the scale to make this worthwhile for us. Takes the same amount of work, same amount of effort for smaller payloads. So ultimately made that decision in August to put on care and maintenance, and we'll see what happens here over the next couple of years. So Terronera and the big changes in the company since 6 months ago, what we're doing and what the plan is here. And like I say, this is going to double our production and cut our cost profile in half. 60% of the revenue comes from silver, 40% comes from gold. It's a 12-year mine life. We've invested over $30 million on this project. We've put out 6 different technical reports. 3 of those were pre-feasibility studies, and then the feasibility study. Put in over 105,000 meters of drilling, primarily into the Terronera and La Luz vein, but you'll see there's, from a regional standpoint, significant opportunity to extend that life from 12 years and ultimately be at Terronera 15, 20, 25 years when it's all said and done. It's a high-grade underground mine, just like Bolañitos, just like Guanacevi. So it's what we've done, 1,700 tons per day, producing 3.3 million ounces of silver and 33,000 ounces of gold for 12 years. Right in the wheelhouse is what Bolañitos used to run at 1,800 tons per day. Kubo was 1,500 to 2,000 for a handful of years. So it's what we do, underground vein mining. As I say, the feasibility study, it was positive economics with the 21% IRR, NAV of 175 million, 3.5-year payback, and ultimately one of the lowest cost mines amongst our peer group. From a cash cost standpoint, it would put us in the lowest quartile amongst all silver mines, and from an all-in sustaining cost standpoint, it puts us in the lowest decile. So there's not that much more that many silver mines that operate at this cost and with those margins that we're going to see. So very positive, again, completely doubles our production, cuts our cost profile in half. With cost being 0 from a cash cost standpoint, that's why we can say generally we will cut our cost profile. I guess the other aspect from that, and this is a different slide deck that I pulled down, so I used to have this slide right here, is the exploration opportunity. So Los Cuates, we picked up these concessions on the right-hand side of the screen in green. We've been drilling that this year. We picked up those concessions last year, put out good positive drill results earlier in June, maybe early July, that indicate that we've continued to drill that area and with positive success and expect more results to come out in December. In the southeast portion, if you can see my pointer on the screen, southeast Terronera, we've discovered a swarm of veins, San Simon, Fresno, Lindero, and Pedencia. Again, in that same June news release, put out very favorable results. Probably not going to be as thick as Terronera, which is running about 5.5 meters thickness, which compared to Bolañitos and Guanacevi. Guanacevi runs 2 to 3, Bolañitos 1.5 to 2.5 in thickness. We do have some areas in Guanacevi that get to 4 meters, but this average is 5.5 meters. The discoveries for San Simon and Fresno and Lindero, smaller, 1.5, 2 meters generally, but very high grade. So kilo intercepts, again, probably not the same size and length of structure as Terronera, but ability to add 2 or 3 years for some of these veins and continue to add mine life when it's all said and done. And then next year, we're also going to focus on Cerro Gordo, other concessions we picked up this year. So lots of exploration opportunities still in the district. And that's why we're comfortable that beyond the 12 years of what's in our feasibility study, that we'll be here 15, 20, 25 years. We'll have a $2 million drill program there next year. I guess the other aspect is what we have at Terronera and La Luz. And on the right hand is a longitudinal cut of the vein and the ore body with some of the highest grade ore being at depth. And it doesn't just end like that. That's ultimately the envelope from drilling. And we'd have inferred resources around that, which would add about 3 years of mine life as we convert those inferred resources into indicated resources or ultimately proven and probable. But it is open along strike and to depth. And similarly, La Luz vein, which is adjacent to Terronera, it's a small ore body, significantly high grade gold. So it's about 12.5 grams gold. It's open along depth and to strike. And once we develop into this, we can drill it or develop into it and continue to add resources, just like what we've done at Guanacevi, just like we've done at Bolañitos. That as we get there, we can replace those reserves through development and replace resources through further drilling. And when you can drill from underground, it's a lot more cost effective. So I guess the other aspect to us and what's been different about Terronera compared to Guanacevi and Bolañitos is we're building Terronera from scratch. It is what we've done before, but ultimately I think the aspect for us and a lot of questions around it come down to our management team and what we've done. And Don Gray, sorry, jumping around from slide deck standpoint, joined us in September of 2020. He's been with us for a year, very involved with the feasibility study, very involved with making sure our feasibility study can be executed, because he's was previously at Barraquita mine in Colombia and built that and sold that to a Chinese conglomerate. And prior to that, he was in Guatemala building the Escobal mine that was in Tahoe that ultimately got sold to Pan American. Don's got a phenomenal reputation for being able to build mines, like the location that, the items that we do. So it's been a good fit. I think the biggest aspect he's added from a feasibility study is making sure we can hit the schedule. He always says if we can be on schedule, we'll be on budget. And looking at operability and adaptability of the Terronera project. So from the PFS to the FS, we added a third portal to give us access and flexibility to be able to blend ore, more faces to be looking at. Now we're also looking at taking ownership of the construction process, so to speak. And rather than a normal EPCM approach, where we hire someone to do everything, we'll do the E and the P, the engineering, the procurement will be handled externally. The construction will be handled by a different group, and management between ourselves and a hired group as well. And ultimately, it's how he did it at in Colombia and Guatemala, and what he's comfortable doing. It can ultimately decrease costs and take more ownership on the mine compared to just handing it over and then taking it over after. We're good at underground vein mining. We're good at underground vein development. What we don't do is the vertical infrastructure. So of course, bringing in consultants and teams that do that make a lot of sense. But us taking care of the underground vein mining makes most sense. So we have a good team in place. We have almost 39 individuals now working under him at the Terronera project. We do have our temporary camp that's growing to 75 beds, and we're moving forward relatively quickly. I guess the other aspect is our build time. It's got a 2-year build time. We are doing, like I say, detailed engineering and procurement. Now we have ordered mobile equipment. Some's expected in December, some's expected in March, to be able to hit the ground running, mostly in January. We do have about 6 months of cutting a hill where the plant's going to go. We have cut some trees already. We do have all our permits. We have some amendments to permits, but the idea would be for Terronera to come into operation for H1 2024. So 2 years from now, we think we can double that production. There's one more slide, and I know everything's out of order. So I'm doing my best to try to stay in line to how I want to say, but ultimately at $24 silver and $1,800 gold, this project is very, economics are extremely powerful with $300 million of NAV, IRR is 30% and 2.5-year payback. That gives us average annual after-tax free cash flow of about $50 million once we're in commercial production, and $460 million over the life of the project. Cash costs, all the gold pays for the silver, basically on a cash cost basis, and all in sustaining costs, you're looking at $1 per ounce of silver. So I fully believe that silver price over the next handful of years is going to continue to increase. We had a nice pullback here in 2021. It's been one of the poorer performing metals, and notwithstanding the last kind of 2 weeks where we've seen it bounce off 22 back into 24. And I think gold sitting just below it's at 1,800. It's important that it tests 1,800 again, and if it can break through, I think there's a lot of runway. And we're seeing a lot of talk about inflation, and that's effectively, if you believe in silver, I think Endeavour Silver is one of those places to play, and Terronera is going to be a great vehicle for us to continue to benefit from that. So behind Terronera, there's just a quick chart of where we sit from an operating cost curve. As I said, lowest quartile for our cash costs, the lowest decile from an all-in sustaining cost standpoint. But behind Terronera, we continue to have projects. And the Parral project is a 100% silver project. It's in the southern part of Chihuahua, about kind of almost a 6-hour, 7-hour drive from Guanacevi. It's old district, mineralized vein system. Again, what we do, underground vein mining. We bought this in 2016 from Silver Standard when they changed their name to SSR and picked up more gold assets. I'd sat in their portfolio for a long time. They just never got around to it. We've drilled it and got it up to about 40 million silver equivalent ounces in the ground. Our goal is to get about to 65 million ounces. It's a little bit lower grade than what we're seeing at Terronera. It's 300-gram silver equivalent compared to 450 almost at Terronera. But ultimately, we need scale here for about 2,000 tons per day to make it work. And that's why we want to get to that 65 million ounce threshold, put an economic study on it, and then hopefully this becomes a mine that we can develop behind Terronera. More work to be done here, but not many silver projects being brought by silver companies into the marketplace. So organic growth with Terronera, further organic growth, hopefully with the Parral project when it's all said and done. We do have projects in Chile, touched on these quickly. These are world-class targets. We've been down in Chile now 8 years. We've picked up a number of projects over the years and kind of discarded them. The 3 that we announced in 2019 was timely because we were going to start drilling there, and then COVID hit in 2020 and we haven't been able to do a lot there. It's been really difficult to get drillers into Chile. Cerro Marquez is a porphyry copper gold, too big for us. We're trying to get some majors in so they can drill it out and kind of carry this as a JV if possible. Continue to slowly bring it forward. We did have some RC drilling to show that our hypothesis is correct. We do have some copper. It is a porphyry. It's just a question of how deep that metal would be. Paloma is a high sulfidation epithermal gold system. It's big, world-class, open pit, heap leach, elephant hunting, so to speak. We did drill this. We had mineralization 0.4 over 100 meters, which is not terrible, not great. There's another area we're going to drill here in November, December. And then Aida, which is a project we've been trying to get permitted. It was expected to be before the Q3 was out at the end of September. Ultimately, it hasn't come. We now don't think it's going to come until the new year. So Aida will be drilled out hopefully January to March of next year. It's a low sulfidation epithermal system, so there is some base metals in this. It's in the Bolivian silver belt, but luckily it comes into Chile, which is obviously a much better jurisdiction than Bolivia. Again, world-class target, multi-year, multi-life, huge open pit targets is what we're looking for. So something that can really change the company. So we do believe we have a sector-leading organic growth profile. We've been built by the drill bit. We have a good exploration portfolio. Parral and Prunner are a little bit more advanced, and then Paloma, Aida, and Cerro Marquez being a little bit more greenfields. But ultimately, the catalyst for Endeavour going forward is going to be Terronera and be able to execute the development plan, and then obviously from an operations standpoint. Anthony touched on this early on. We're on the New York Stock Exchange and the TSX. Today we're just shy of $5, so about $800 million in market cap. We've been hovering about there. I think we peaked out $7, $8 with a pullback this year. It's fine. We are very volatile because of our silver leverage, some of the best leverage in the space. And you can even see on here, Hecla, Pan American, Coeur, Fortuna, and First Majestic all picked up gold assets over the last 4 or 5 years. I'd argue that First Majestic's the only one with silver revenue above 40% as their total revenue mix. Our largest shareholder is Fresnillo. They own some of the assets we had previously. We have good coverage out of Canada and the United States, and a good balance sheet, which I've touched on, with $125 million cash at the end of Q2. We have been accumulating metal. At the end of Q3, I think we had 1.1 million silver ounces. Ultimately, that's worth close to $25 million. That would be included our working capital, but our cost profile. So you'll see our earnings come out in November. We didn't sell. We probably held back about 500,000 ounces. The profits won't come through in the quarter because we can only hold that at our cost. But ultimately, when we do sell that metal, those earnings will come through. So I'm sure I'll get questions on that come November. We do have good liquidity on the exchanges, turning over our float on a monthly basis effectively. So with that, that's the Endeavour story rather quickly. Happy to open it up for questions and Q&As. I don't know, Anthony, I'll try to open that. If there's none there, I'm sure Anthony will have some questions. By all means, these are great opportunities to ask me what you want, what you feel, or what you're thinking.
Absolutely, and thank you for that, Dan. Great presentation. Obviously, the company's on track to deliver not only strong production results with the current infrastructure, but Terronera. It's nice to know that that's progressing as planned. So for everyone on, I want to open the floor up to some questions from our attendees. If you have any questions, type them into the Q&A box, and I'll make sure they get answered. We're going to wait a few minutes to queue up a few questions here. For those attending today, the code word today is swordfish. So can you talk about, before we get to this question, can you talk about, you said obviously that Q2 operating costs were up. So going forward, do you think they normalize to where they were before? Like, what can we expect going forward?
Yeah, operating costs for Guanacevi were significantly up in Q2 specifically, and part of that reason was the operational development. And if there's no, under IFRS or accounting rules that we follow, if there's no reserves there, we're not allowed to capitalize that. And ultimately, we'll have operational development from time to time where we spend a lot of money on hallways and we don't get any ounces out until we reach a certain point. And we have conviction, or we have a good idea that what's out there. We had to expense a lot of that in Q2, which increased our costs on a per ounce basis. Now we got a lot of those ounces out with that cost already running through in Q2, and we're going to drive back down to $7.50. We had some supply constraint items. We are seeing wage increases. We are seeing increases on our professional costs, the engineers, the geologists. That's definitely picked up with what's picked up in the mining space. I would say the supply stuff, we didn't have a lot of supply constraints as far as logistics of getting it there. During the start of COVID, we'd sourced a lot of the things that we were getting in the US. We started sourcing it from Mexico, or more from Mexico, things that we got from afar. There's some things we got from Spain that we're now getting in Mexico. But ultimately, we did see a little bit of inflation costs in the first half of the year, kind of everywhere, a little bit of cuts by 1,000 cuts, so to speak. But the other one that was big for us was bonuses. So 2020, we hit a lot of milestones. That all got formalized and finalized in April, and some of those costs worked its way through. So ultimately, long story short, 1050 was our cost on a consolidated basis, and our guidance was 750. The items like royalties and special mining duty, those were higher than our plan because we used $22 silver in our guidance, and we calculate that's just math of how those are calculated. And ultimately, we averaged $26 in our cost profile in the first half of the year. So the second here in the Q3, a lot of those things have worked their way through, and our production profile was actually quite good in Q3. So on a per ounce basis, we're expecting to be right back into where our guidance was, $7.50, $19.50 from an all-in sustaining cost standpoint. Those ounces and the ounces that come from Guanacevi and Bolañitos, they're mature assets. We should be pretty good at predicting where those cost profiles are. And they're going to fluctuate on a per ounce basis from time to time, even from a per ton basis time to time because of grade or certain times as our operations. But like I say, we're predicting that Q3 and Q4 are going to come back down to where guidance was, especially with silver averaging about $23 in the third quarter. Our royalty cost is lower, our EBITDA tax is lower. They all get included in those metrics.
And so I have a question from John. When you think about capital planning, what metal prices do you use in making those decisions?
Yeah, we're going through that right now. So we use this below current prices, and this year's budgeting process, we'll use $22 silver and I think $1,750 gold or $1,700 gold. Now that doesn't mean that's where we expect prices to be. So two things: running our mine for $22 silver, and then we have sensitivity. So we look at running our mine for $24 silver, $28 silver, probably even 26. And we allow that flexibility, but we are kind of open up stopes, and we're pretty tight from a vein standpoint. We don't have this huge halo effect that we can go into lower grade or pull more and get more, dilute more and get this halo effect that we can take more basically waste material. So we're pretty much defined in the ore body that doesn't impact us. We start looking at where do we think silver and gold prices are is from a long-term strategic standpoint. And I never get into too much, and I'm happy to talk about where I expect silver to go, but I never say where I expect the dollar to be, or do I predict a $30 price or a $35 price. It's like, who knows? I know it's going to be higher where it is. So internally, we always kind of get behind that. Some of it's looked at because of regulatory requirements in Canada. We have, for reserves and resource estimation, we have to use a 3-year or 2-year trailing average. And ultimately, you want to run your operations to be free cash flow positive. And if you start predicting that we're going to be at $28 and you're going into some areas that are lower grade because you're using $28 for your mine plan, and you don't hit those numbers, you're ultimately making negative cash. So we're using 22. We look at sensitivities all the way up to 28 so we can make those adjustments. But ultimately, it's the long-term strategic stuff where we're really kind of using where we think silver and gold prices are going to go in making those judgments, not so much on the short-term basis.
Yeah, and I'll be asking you about that shortly. But other than buying the stock outright, how else can clients get exposure to Endeavour? Mutual funds, ETFs. You are in an ETF.
Yep, we're in the VanEck ETF. We're in the TSX Composite. There's a handful of different silver ETFs. If you just do a quick Google search, you'll be able to see all those because there's a number of them. iShares is one of the ones that are jumping to my head right now. GDXJ, so there's gold funds that were carried in, junior gold funds that were carried in as well. Again, that's the VanEck side of the portfolio. So there's a number of ETFs that hold us. It's just how you want to go through there. I couldn't tell you right now off the top of my head of various funds because they're all over the place, but we are also significantly held through retail too. We have a big retail following in Endeavour, and that's a function kind of the US market and Americans' affinity with silver, and they, like I say, affinity to silver, the long history in the United States with silver, and we get more queries and questions out of the US. Germany's pretty high. Germany's pretty high too, but US definitely takes the cake when people call about buying silver from us or trying to enter the stock.
Yeah, and I know that we have people on our webcast today who are shareholders and have owned the stock or followed it for a long time. So definitely a lot of people are following it. So getting back to what you were saying beforehand in terms of the outlook for silver, obviously, talk about inflationary issues, which will most likely push the prices of metals up, gold and silver. But it's always interesting to talk about the industrial demand for silver. I don't think people understand how much silver is used in our lives each day, and they don't even know it, and how that is going to grow. So can you talk about that a little bit?
Yeah, for sure. Silver is a phenomenal metal in the sense that it's the best metal from an electrification standpoint. So it loses the most amount of heat on transferring electricity on contact points, which is very important, which is why it's in all your flat screen TVs and flat screen handheld devices when it comes to computers, et cetera. And you've seen an explosiveness in the last 15-20 years on that and the industrial side of things from silver. I think 20 years ago, everybody thought of silver from industrial standpoint, photos. Well, most of the silver in making photos is recycled, and you don't lose a lot. And I believe Dow Chemical is still the largest consumer of silver, and that's just for chemical reactions. And they lose some of their silver in the chemical reactions, so they continue to buy, obviously replace that. But the idea that we're going to go to this greenification in the world is going to mean that, and electric vehicles is a big part of this, is more silver in our daily lives. And that where gold's got the monetary aspects, and gold's a store of wealth. And as the governments continue to make oddball decisions to continue to spend money that we don't have, continue to go into higher debt and ultimately devalue our currency, you want to jump into gold. And there's so much more data when it comes to gold and monetary aspects and literature on it that it's easy to follow. But if you look at the silver, gold will move, run, and then silver will follow, overshoot it, and ultimately have a higher volatility. And it's always been deemed the poor man's gold, and that's fine. But I think that's changing because there's so much more from an industrial aspect, and we're seeing that growth. A normal vehicle market's taken about 60 million ounces of silver off the market in its use for components, whereas an electric vehicle's going to be 3 times that. So you're going to go from 60 million to 180 million. Well, globally, we only produce 800 million ounces of silver through mines, and 30% of that comes from primary silver mines. So there is some opportunity to grow, but we haven't been investing in our sector for the last 5 years, and it's really hard to find a primary silver mine. And now from the base metal side, where most of the silver comes from, it's a byproduct of copper mines or lead and zinc mines or gold mines, and that's where price and ultimately how Silver Wheaton got built, that as a byproduct, you're not as concerned with prices, but that's more from the supply side of things. It's the demand side. And I'm looking right now more for gold to break through 1800, 1820. And if it breaks through that, a couple months later, I would, if not earlier, you'd see silver break through the 26, 27 range, maybe 28, and in the 30s. And when you start looking at some charts, if you can get into the 30s now, there's a long run there. And I think we're going to hit that. The inflation world, which is on the monetary side of things, in Canada, they just announced that we had 6.6% inflation last month, which is the highest they've seen in the last 30 something years. And now our banks, Bank of Canada, the governors of the banks and CEOs of the Canadian banks, which are pretty big banks, are coming out and saying, okay, this transitory inflation isn't exactly transitory, it's going to be more persistent. So that's starting to percolate as well. And I think a lot of people knew when, oh, it's transitory, don't worry about it. It's just kind of like, okay, well, when do you start worrying about it? Because we all feel it, you all see it. It's going to come through. And I just think right now silver is sitting up so well because of the industrial aspects and then the monetary aspects. So it's a great entry point. And this year has been a correction, and it's best to invest on a correction.
Yeah, and gold did touch 1800 last week. So
yeah. And it came off, and it's going to, through just normal technical charting, it's got to test it a couple more times, maybe one more time, and if it gets through, then it's rolling. So we'll see.
A really good question here from Marshall. What's the timing sequence of the board decision on construction and finalizing the financing package? Which comes first, or both at the same time?
Yeah, it's financing package is what's required for the board to give a decision. Obviously, we love the project. We have the equity component there with the cash that's on our balance sheet, the cash flow that's coming in from our operation, working to get about 80 to 90 million dollars of debt. Maybe it's 100 when it's all said and done. Working with some European groups, it's project loan financing. So we're talking 4.5% money over hopefully 8 years with a couple year grace period. Pretty far down that path. Expect it to have a commitment letter for December. When we have that commitment from the banks that that cash is available to us, then we have all the financing that's there, and the board will give the decision for a construction decision. So our expectation is December. I'd tell you right now, there is always delays, and if that ends up in January, wouldn't be shocked by it, but aiming for December 15th. We shut down for a week at Christmas time. Canadians kind of use more time at Christmas than we do at our Thanksgiving, which was back here a couple of weeks ago. So we close our office, but I want that done before Christmas break. And if it ends up being in January, so be it. But we expect kind of be full bore in January on construction.
Yeah. So do you have or plan to have retail silver direct purchase program?
We don't. I know a couple of companies, First and Dutch, that comes to mind. We have coins. We kind of sometimes give them out on as an investor thing, but maybe as price increases, we won't be giving those out as much. But I always get a question. This is very common. People will call and say, hey, I'd love to buy, I don't know, call it 10,000 ounces of silver, and we'd like to buy it direct from you. And you look on Kitco and it's $22 per ounce silver. I go, okay, great. It's you're going to be buying $220,000 worth of silver. And they go, well, because I'm buying so much, I'd like a discount. And okay, well, the price is 22. And then they get over that and they go, okay, well, how do I pick it up? And it's like, okay, well, you better bring a truck and come pick it up. And they go, okay, who pays for that transportation cost? Well, you do, because there's no cost to us. So what happens for us when we produce our bullion and refine it out of Pinoles is they produce that silver and it gets credited into basically my London account. I call a guy in New York and he sells the silver that's in my London account. And that ounce that I actually produce probably never ever makes it over to London. It gets shipped off somewhere else just to save on transportation costs. Yeah. So ultimately, for me, with no work, I can sell something, an ounce of silver on an exchange, get my $22 and have no cost to that. Whereas someone else that comes in and says, can I buy silver? The cost of transportation, handling, et cetera, minting it, I can't get the same. And you'll see, I think First Majestic or even the bullion exchange, we have one in Vancouver, they sell it for a little bit more than what the quoted market prices are on exchange. So for us, it's never been big. I talked to Keith, it's not a moneymaker for them at all. Okay. It's more marketing for them. And that's kind of the mechanics behind it of why we don't do it.
Yeah, I remember when Brad used to give out those coins at the investor meeting.
Yeah.
So
well received, trust me.
Exactly. Yeah. So this has been asked before. What's the dividend outlook for 2022? Obviously, the goal is to conserve cash as you get everything up and running with.
Yeah, I mean, right now we have a great balance sheet, but we have a huge growth profile ahead of us. Spending $175 million of capital means there will be no dividend in 2022 and none in 2023. And Terronera comes online in 2024 and we get substantial cash flow when Terronera comes online. So right now with our capital and especially with what we have in front of us, dividends not in the question until you're talking 2025. And I hope at that time there's still opportunities for growth and be able to replace effectively one day Bolañitos or one day Guanacevi. And be around with a couple, 2, 3, 4 mines for another 25 years. So at this point in time, we're continuing to look at growth stories and probably need another mine behind Terronera eventually to be able to start talking about dividends. And one day the goal is to be profitable and consistently profitable and sustainable and ultimately give that money back to shareholders through dividends. And right now they can do that through stock appreciation more than dividends.
Yeah. Absolutely. So just to clarify one thing, Marshall's asking, did I understand correctly that the equity portion of the financing package would all come from cash flow?
Well, the clarification is right now we're at June 30th, and it'll be similar just depending on how much the metal where it falls out. But we had $125 million cash at June 30th and $150 million of working capital. So we have our equity portion of cash already on the balance sheet. So it's putting debt on our balance sheet, which currently has no long-term debt. We have $6 million of equipment leases that are up in the next 2 years, and leveraging that, our balance sheet and ability to take on debt to get better returns and not dilute the shareholders by taking on more equity or selling more equity.
Yeah. And okay, so in terms of, I guess, financing Terronera, if you have $175 million capex, how much debt do you think you'll take on?
Working for 80 to 100, so just call it 90 million right now. So that would put us at the end of the year somewhere around $250 million of working cap, if not higher. Yeah. So that's enough of a float to protect ourselves with overruns or delays. Plus, we'll have cash flow we expect in 2022 and 2023 from our mines. So we should be in good position, but that gives us some room to look at other assets, something similar like we done with Bruner. We do have exploration programs planned for 2022 and 2023, like we have always done, but continue to look for more silver ounces to bring into our portfolio.
Yeah, financially, obviously the company's, I think, in great shape to take on a project like Terronera. So
absolutely, we're in probably the best financial shape we've ever been in.
Yeah, and I don't see that as being a problem. So I think I want one more question before we go. So are you seeing, so obviously everything with COVID has been delayed, getting equipment, getting all your ducks in a row, so to speak.
Yeah.
Looks like you guys have been pretty proactive in this. Have you seen anything that might concern you at all?
No, not concern us. We've done a great job being ahead of the game. So we got 2 mobile fleets coming in December, which we ordered back in May. And that was part of our $22 million capital originally, and for the first half it was $9 million. And then we've ordered a second fleet from Sandvik, or sorry, a third fleet from Sandvik for the third portal that came out through our feasibility study. And that will be in May of next year. So those have been ordered. We have a ball mill already at 2,000 ton per day, or it would allow us 1,700 ton per day ball mill sitting in the warehouse in Puerto Vallarta. There's a SAG mill that we're looking for. We're looking for a used one that we can refurbish. That we think we've got a couple that we're going to be looking at that we can get us there. Most of our development costs, and I get a lot of the questions like, oh, how are you going to protect against inflation on the build? And steel is definitely increasing in prices, and we've locked in some of that with already signing agreements with, like I say, with equipment. But ultimately, silver and gold are hedges to inflation, so I'm not overly concerned about it. But you want to do your best to mitigate it. The other aspect to us, underground, $70 million of that capital build is underground mine development. So that's labor, 34% of our costs on a consolidated basis. So for the whole processing is labor costs. So call it like $40 a ton at Terronera's labor. And obviously you lock in your labor at the beginning of the year. We have a union contract, friendly. The union for us at Terronera is management friendly. It's how it works in Mexico, and ultimately those get looked at on an annualized basis. I do think the peso is going to depreciate compared to the US dollar. It has. It's the long-term trend of depreciating since the 90s. So we think we're okay in that sense, but it's us moving right now. As we're cutting the hill, we're working with groups to try to get prices locked down. We got hard quotes for feasibility study. I just need kind of that cash in place to finalize those contracts. But I'm not overly concerned. As far as we've been working diligently all year with the idea that we're going to have a positive construction decision. And Don's whole mantra is we want to stay ahead of schedule. We want to stay ahead of schedule, buy ourselves a little bit of leeway. And I think that's going to help us with making sure that if we have any sourcing issues, that we've already kind of started taking care of it.
Yeah. I mean, we're kind of running out of time here, so I was hoping that maybe you could briefly just touch on just the resources around Terronera. Can you talk about access to workforce? Jalisco is obviously a pretty heavily populated area.
Yep.
Just there aren't going to be really any issues trying to bring in resources to try to get Terronera up and running.
Yeah, no, there's a town called Santiago. We've actually taken some of the community people there from there to Bolañitos, train them. Obviously the professionals, kind of the professional engineers, the geologists, the mine manager, plant manager, GMs. It's gonna be an attractive location, and we're having no problem recruiting people from a build standpoint to Puerto Vallarta effectively. I mean, you're 2 hours inland. We are going to have a camp there, so we can keep people at site most often, but on weekends we can't control that. And it's a beautiful part of the world. It's a beautiful climate for the world. The spot's phenomenal climate. So we fully expect that. Lots of labor, relatively cheap labor. It is about training that up. As you see, we'll bring people over from Bolañitos and Guanacevi that we have a long history with. That's the labor concerns would be small. Our permits are all in place. We have good relations with communities. We'll always have to work on those relationships with communities. Even going from an exploration to development, there's going to be challenges. There's going to be more noise, so to speak, light, more dust, et cetera, et cetera. If any time there's changes to small communities, we are going to become the largest employer in the area. And then even transferring from development to operations, you're going to create another kind of change for that community, and continue to kind of consult with them and be involved with their lives and understand what their issues are, because there are going to be issues. Like I say, one guy's going to be getting paid during the construction phase based on what his company does, and another guy might end up getting paid, his small business getting paid during operations, and that just creates change in the community, and ultimately that needs to be communicated and dealt with. And we have the team that can do that. We've been there. Luis has done a phenomenal job bringing the community along and getting them support on it. And so those resources are all good and in place. the location, the biggest obstacle over the last 3 years might be power. There is a power line that goes right through the property, but it's fully used up. There's brownouts in the area. We're doing a liquefied natural gas. It's coming up from Guadalajara. We have 2 trucks come up basically on a daily basis. They'll probably come at night just to not disturb the towns. But we've been managing that over the last 2 or 3 years, so I don't see it as much of a risk as. And maybe one day we end up getting a power line put in, but we wanted to take it out of Mexico's CFE's hands and put it in ours, just because we can control that, or we can't control CFE. So we've done what we can, but I'm sure there's going to be a bunch of things that pop up over time. It's what we get paid to manage.
Yep, absolutely. But it sounds like pretty much all the resources are in place. It's just there are always going to be hiccups with a project this big.
That's what makes it fun.
Exactly. Okay, well, I think we're going to leave it there. Dan, obviously, we really appreciate you coming on today and get us up to speed on the company. Exciting time for the company, exciting time for the metal space. If you believe that silver will be higher in the future, which, I mean, everything is pointing that way. Endeavour Silver is definitely worth a look. They're leveraged to silver. They're a well-run company. We've known, Brad for a long time. And obviously Dan's been with the company for a long time as well. And so if you want to play silver, New York Stock Exchange company has a lot of great things going on. Endeavour is definitely worth a look. So thank you again, Dan, for coming on and giving us an update.
Awesome. Thank you. Thanks for everyone taking the time. Appreciate it.
Yeah, appreciate you coming on. And in the meantime, if anyone needs additional information on Endeavour Silver, visit the company's website at edrsilver.com. It's a great website, details on the company's current projects, technical reports, and press releases. I do encourage everyone to go to the site. There are some short informational videos about silver and its role in the economy that are really great. I think you'd all like it. And obviously you can reach out to me or Dan, and we'll be happy to answer any questions. So again, thank you to our attendees. Thank you to Dan for coming on today. And we look forward to having you on again in the future. Another one of these next week, but looks like a lot of great things are happening with the company. And again, thank you very much. We'll talk to you soon.
Thank you. Thanks, Anthony.
Thank you,
Thanks, everyone.
Thanks.